The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. Now, Larry Pesavento.
Okay, looking good, Billy Ray, feeling good, Lewis. I posted a picture that someone had on the internet that I thought was pretty cool. Someone from the den here showing two NBA basketball players in a mortal lock of offensive defense, sweating like the athletes that they are, and I'll be darned if they're not wearing masks. But they have to wear masks on the bench, and they're not allowed to shake hands before or after the game. Folks, something's wrong. The boys are not thinking with a full deck, is my opinion. Here's the DAX. You'll notice here we had this huge pattern. We went down, took out the lows of July by just a little bit yesterday, and the German DAX just took off. We went all the way up, made a big 382 retracement. I thought you saw the one with the basketball players. I'll put that up here so you can see it. Someone saw it because they mentioned it to me. Hold on, let me get this up here. Then I'll move on. And then I'll take a look here I've got some questions this morning that I want to try to clear up. But I posted the German DAX, and of course we had the elections over there are going to be pretty tight, I guess. And then we had the one in Canada. I'm going to be talking about that. But here is the FTSE. You'll see the FTSE went right up to that big support line, went back and touched it, so it's going to be even. Folks, one of the things, I had three questions in the email last night about when we were talking in the markets yesterday about the importance of that number we were looking at, which was 4293. I just want to get this, put this up here. Here's the S&P from yesterday. Remember, we were talking about that when it was trading at 4360, and it went down and made an exact, to the tick, 78% retracement of the low from July the 18th. It also made a perfect 1.27 expansion of the low on August 18th, and then it rallied 382. Now, after the market closed yesterday, I sent out a video saying to watch 4391 because that's going to be the 382 retracement of the whole move. And by golly, it went to 43.92 and broke all the way back down to 43.30, right at the 61% retracement, and then back and forth. We've had two ABCD patterns today, totaling more than 60 points. So the ABCD is in full force. It doesn't work all the time, but it works a lot more than you might think, far better than 60%. And not only that, but a third grader can do it. And we've got a call from Denver, Colorado. John, how are you?
Hi, Larry. How are you?
I don't know how you got through today, pal, but thank you. What can I do for you, my friend?
Well, real quick, first of all, I just have to thank you for that interview with Paula yesterday and, hearing about Mark and trading in the zone. It's really a foundation of what I'm trying to get reinvented with. But I am looking at FDX. I do have a small position in it. I got around in at 249 this morning, and They do report earnings after the bell, and I need your expertise, please.
Well, John, if they're reporting earnings after the bell, my expertise is not going to help you very much. You're going to have to go to the man in the sky and say some prayers because you're going to be rolling the dice on this one. However, the good part of the dice is that you're completed an ABCD pattern down there at 249. You're just a tad below the 78% level. You're grossly oversold. So I don't know how bad they could hurt it, but earnings are always difficult. But this market is weaker than the rest of the market. In fact, FedEx and UPS should be going to the moon, given the fact that where these things took off from. But I wouldn't use it. I wouldn't put a big position on this. We probably have a couple 100,000 shares, but slow it down a little bit. Maybe go in with maybe 50 or 100 shares because that's a big risk in here. You see, we focus on everything that we control and risk, and when you've got earnings out there, John, you can't control it, my friend. So, given the fact that the market was up today at 253 and then got down to 249, it's not acting well. So the risk is in your court, my friend. I prefer prefer to not take that risk. That's the way I would do it. But, we live in different time zones. You're in Denver, I'm here. So
right.
Some people like chocolate cake. Some people like white cake. I wouldn't take the risk. That's my 2 cents worth.
Okay. Well, it is a small position. I only got 100 shares, and it's actually a little green already. So I have a hunch I'll be out before the close, but it's just one that's kind of fun to watch. And it had been beaten down so severely that I just had to, as Basil would say, I tiptoed in.
Yes, there's nothing wrong. I love the position. The only thing is the earnings today. But, this stock's been hit so hard. I mean, what are they going to do? They know something's wrong with the earnings. So my guess is I just don't like, first of all, A, I don't trade stocks. And two, I don't like the earnings. I like after the earnings, but the earnings, they just play too many games with those things. So I'll be following this. And you know what we're going to do is we're going to report on this tomorrow just to see how you did. Because if you're rich, you can invite everybody over for coffee over there in Colorado.
I will do that, sir.
Hey, listen, good talking to you, my friend, and may God bless.
Thank you. Same to you.
You bet. Okay. All right, folks. That's my focus on risk, so that's what we're looking at here. Now, I wanted to bring to your attention one other oh, my goodness. One other thing. Hold on one second. I want to do something here. I've got to get something fixed up here. Okay. Where did we... Hold on, folks. I thought I had a. Well, I'm not going to worry about it. Just give me a second here, folks. I have to do something here. Let's move on here. Says Jimmy's saying that Amazon's the biggest threat to FTX. It probably is. I imagine it is. Let's talk about the election a little bit over in Canada, folks. Here, Trudeau made it through, but just by the skin of his teeth. And it looks like, to me, this is a daily chart of the Canadian dollar. And it really looks like we're ready to get making a 3 drive to a bottom pattern here. We made a little bit higher high than yesterday, which should have been, friendly to the election. It wasn't. It's reversed. And we're right at the 786 now. So it looks like we're going to come down to the 67.27. That's down 150 pips from where we are right now. Now, if it would reverse and get above 78.30, then I would say, well, this is not going to work. But right now, I'd be waiting for that 3 drive pattern in the Canadian dollar. Now, we were in the euro. It worked for the tune of about 40 pips and then came right back down, and we got out at break even. We're still waiting to see, what's happening with that. The dollar is strengthening again with the euro weakening, and believe it or not, with the dollar strengthening, gold has actually rallied, which is very, very unusual. It cleared the 78%. Wow. It cleared the 38% level that we were looking at 1770 this morning, and it got all the way up to 1782, and silver has actually picked up a little bit too. So we'll be watching for a buy signal here on an ABCD pattern in the gold in the next few days as it tries to, when it makes a pattern, we'll be able to, keep a really, really close eye on it for sure. Now, I've covered the DAX, I've covered the FTSE, and I've covered FedEx for John, and we've covered the E-mini. When we come back from our break, we're going to talk about a market that is very, very important to all of us, the Treasury Notes and Treasury bonds.
Markets can rise and fall like the tides. Subscribe to Basil Chapman's newsletter, The Opening Call, and you too can ride the wave. Basil Chapman is an authority in technical analysis. His Chapman Wave trading system has been helping traders identify trends and capitalize on momentum in the markets since 1984. TFNN invites you to test Basil's proprietary Chapman Wave trading methodology with a monthly subscription to the Opening Call newsletter for only $149. Your subscription to the Opening Call comes with a 30-day money-back guarantee, as well as daily market updates on key indexes, stocks, and commodities. Ride the wave! Sign up for the Opening Call risk-free today.
What's separating you from the most successful men and women on Wall Street? That's right, information. Having all the information gives us the perspective we need to place the right trades at the right time. The TAS Profile Scanner is the premier market profile-based scanner. Powered by its acclaimed TAS proprietary algorithms, this feature-rich scanner instantly filters over 2,500 plus global financial markets, such as stocks, ETFs, commodities, futures, and Forex. This powerful suite of tools leverages instant trade filtering and strategy formulation to show you emerging trades before they happen. For a limited time, you can save $100 off your first month by using the promo code UPGRADE, and you still get a 30-day money-back guarantee, so you have nothing to risk. Level the playing field with the TAS Profile Scanner, which you can find under the Services tab at TFNN.com. Sign up today.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern. For free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Okay, folks, I posted a chart here. It's another question that someone asked, and I'll bring it to this chart that we're looking. This is the S&P that we were looking at, and the question was that standard deviation. The reason why the standard deviation is so very important, folks, is it's based on what the options are doing, and we've had an explosion in options over the past 20 years, and that's why it's so very important. Let me give you some really quick little words of advice. When you see a double fib point, 127 and 786, it could be 618, 1.618, doesn't make any difference. When you see a double of that and it hits right on a standard deviation, whether it's 1 standard deviation, 2 standard deviation, or 3, just get ready in reverse, because that is a big thing. We talked about that yesterday. We got right down there. There was a huge ABCD there, of course, at 73.50, I believe. We went lower because of the standard deviation and the 786. But not only that, folks, here, let's do your homework tonight and have some fun and make the old cowboy happy. Go take a look at what happened to the Dow Jones Industrial Average. How could the Dow Jones Industrial Average, E-mini, which hardly anybody trades, it's the worst of the 4 indices for trading, hit the exact 786 to the tick? And how could the NASDAQ hit the exact 786 to the tick? How can it do that? And then overnight, what did they do? They went right up to the 382 retracement and reversed. Now, this might be a short-term reversal, but by golly, that's what they did, and that's what's happening. I'm just telling you what I see, and that's all I can tell you for what it's worth. Now, you can learn to do this yourself. We have a Floor Trader's Handbook that's got 90 pages. It also has a 90-minute video. It'll do 3 things for you. It'll teach you how to do the standard deviation for yourself on anything. It'll prove to you without a shadow of a doubt that the ABCD pattern is absolutely 100% mathematically perfect. It is the Mandelbrot's fractal analysis put in numbers, and it's perfect. You'll be able to do it without any trouble. You'll understand more about harmonics than you've ever stood before. And not only that, you will be looking at a series of trades that were done by computer, thousands of them on the euro, and it mathematically proved that it actually does work. It puts the odds in your favor. It quantifies your risks. You got a 3-to-1 risk-reward ratio on any trade that you're doing, and that's what you really want to be doing. So if you want to do that, you just reach me, Larry Pesavento at gmail.com. and I'll knock off an extra $50 from the 197, so you pay 147. And folks, that money will go to a needy family here in Arizona, and not mine, but but it will go to a needy family. And we'll see what happens after that. Okay, let's move on to a couple other things that we wanted to chat about. One is a question we had from Jeff out there in Philly. Just get the chart here up on the gold. This is very interesting here because this is a good thing to look at. This is he's got a little too many lines on here, but I haven't been able to get him to change his mind. Your question here, folks, if you look in the middle of the chart around September 8th to the 10th, you'll see a double bottom there between B1 and B2. Okay, now he asked me which one should he take. Well, actually, if you looked at it real close and blew it up like I did, the B2 was actually a tiny bit lower than B1. So that's the one that you have to use. You should always use your lowest one, because that'll give you your more accurate results. So that'll be the B leg, and then the C leg went up in one bar, and that was it. And then down it came to the ABCD down there at that 1742. Now the buy point on that was 1739. We only got to 1732, and here we are, setting at 1782. Well, we missed that one, but that's neither here nor there. Now, the key to that, in my opinion, and I handled it completely wrong today. I took a $2 loss in that. And that was, I was watching the 382 in the gold coming in at 1770, and it hit it, backed off a few dollars. And then I had my stop working, and I lowered it down for just a $2 stop. And once it went above 1770, it just jumped $7 very, very quickly. And I was out long before that. I didn't reverse, because I don't reverse often, almost never, because I'm a pattern trader, and breakouts I just don't do too well with. But anyway, that's how I handle that, and that's why the risk thing is so very, very important as we look at these. I do want to thank you for sending me the emails about having Paula on the show yesterday. We're going to have her on again because she's got some wonderful things, and she's a great writer. I mean, she basically taught Mark how to do the writing and stuff, and a lot of his ideas together, because we did all these seminars and stuff together, and she could put on a seminar all by herself, which I'm sure she does now. Anyway, now the big question that I had, well, not big question, there was one email, was that a major bottom in the stock market that we hit yesterday? Yes, it was. It was a very major bottom for several reasons. One is we're right over the equinox here, folks. This is the autumn equinox yesterday, okay? Now, if you ever go to Chichen Itza down in Cancun in southern Mexico, the Chichen Itza pyramid is the pyramid that on the equinox, the autumn equinox, as the sun hits 12 o'clock, the shadow moves across the pyramid, and it looks like a snake moving down. You should go online, pull up that thing, and take a look at it. It would save you a trip into a very, very hot part of Mexico at that time of the year, and very dangerous because of the desperados that are in that part of Mexico, because there's so many tourists that come in, and they can be easy prey if you're not careful. I love that area, but you got to be extremely careful these days. I was there 30 years ago, and it was a piece of cake. However, just remember, go to look at Chichen Itza, the pyramid in Mexico, and you'll be able to see that pyramid. It's called the Pyramid of the Sun, I believe, and it's where the equinox comes in. When I was there were 250,000 people there, folks, and that was 30 years ago. So it's a big deal. Okay, now. Another question that someone's asked was about the cryptocurrencies. I remember I mentioned the ADA, and all I'm going to do is look at ADA, because I don't look at any of them. Well, I look at them, but I don't trade them. I have not put a trade on in them. I don't know if I ever will or not. But if you just look at this ADA pattern, you can see the beautiful butterfly top we had up there, which was also a 3 drive to a top. And then also we had the Gartley pattern. Now, the Gartley pattern is where you're going to get your price objective. So that's the C leg, your A leg is the absolute high. Your B leg is the low, which is down there on the 7th of August. Then we rallied up, for 4 days, right at the 61% retracement. That ABCD pattern takes it to 157. So if Cardano gets to 157 and you have a theory on that, just go ahead and you could buy it at 157. It's only a dollar stock. So, and believe me, there's a lot of people playing it. So that'd be the best place to buy it. It'd be much better buying it there than at 310 when it was making a high. That's just the way I look at things as we go through these. We got a break coming up here. And then we will definitely have an announcement starting October 4th, folks. It looks like I'm going to be starting an hour early. I'm going to be starting at 11 o'clock instead of 12 o'clock starting on October 4th. And we'll be going from 11 to 12 starting then. We'll be right back. 877-927-6648.
Are you having fun trading the markets but having trouble finding like-minded individuals to discuss your trading and investment ideas with? Become an apex predator in the trading markets and join the Tiger's Den Trading Room only at TFNN.com. The Tiger's Den is an exclusive trading room where successful traders from around the world come to exchange trades and ideas. Join the den and surround yourself with the sharpest minds in the trading world. Subscribers to the Tiger's Den are also the first to have their questions answered live on air and can privately chat with our TFNN hosts live during their shows. Interact with other Tigers and Tigresses as they share trading ideas, news analysis, and discuss the market action all trading day. Subscribe to the Tiger's Den risk-free with our 30-day money-back guarantee and become part of the TFNN trading community. TFNN, educating investors.
You could be making money off the stock market. And if you're already making money off the stock market, you could be making a lot more. Check out TFNN and Tiger TV and get expert investing advice to give you the power to control your financial future. Go to TFNN.com and find the newsletter for you. Whether you're into trading gold, metals, futures, currencies, or options, you'll get advice and analysis to help you seriously get ahead. TFNN also features trading services with a 30-day money-back guarantee for new subscribers, as well as TFNN's Tiger Den Trading Room, trading software, and educational webinars for all trading levels. And make sure you check out Tiger TV for free on TFNN.com or TFNN's YouTube channel for live financial content from 8:30 a.m. to 4 p.m. Eastern on market days. Stop watching on the sidelines while other people get rich and become the investor you were born to be. TFNN, educating investors.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Okay, folks, I posted a chart here of the Treasury Notes. This is the 10-year note, U.S. Treasury note, and then, of course, there's the 30-year bond. This is by far the largest. I think the open interest in this is close to 7 million. Trades a huge amount. It's not as volatile as the 30-year bond because that's where the speculators are, but it's very, very important for interest rates as far as your car, your mortgage, and credit cards and stuff like that. But the reason why I want to bring this to your attention is we made a high in this back in 2020 up at the 140 level. And basically that's when everybody was giving you the cannon fodder and feeding you tapioca, telling you that this was going to be negative interest rates. We got to put our money here. Well, folks, you can see that certainly was not the ball game that they were trying to get us to watch, and it certainly changed. This is extremely bearish. The bearish part of the interest rate thing, folks, is the fact that the junk bond market is some of those junk bonds, believe it or not, people are willing to give a negative interest rate to a junk bond. You're going to have to sit down and explain that one to me because I don't understand that one at all. So that's we'll go into that at another time frame. But in Bernard Baruch's book, My Own Story, and he was one smart puppy, he's who J.P. Morgan relied on for financial advice. And if anybody like J.P. Morgan relied on somebody for advice, that's the guy you want to talk to. And it was Bernard Baruch. And Baruch said the greatest scam in all of the markets is to inflate something to a high price, and you'll be able to get suckers to buy it all the way down. Two of the famous stories that are in that book is he was talking to, what was the name of that woman? She was a very famous actress during the 20s and 30s. I can't remember. You know who it is, but I can't remember the name offhand. And she asked him, how do I become a good stock trader? And he says, what you want to do is you want to be able to buy low and sell high. And she's, very interesting. She says, well, how do I do that? He says, do you have about 20 years? And of course, that was the story behind it. I can't remember the actress's name, and the book's in the other room, so it's not important. But it was somebody extremely, extremely fair. Marlene Dietrich, that's who it was. There you go. Did remember, finally caught up with me, and we'll be able to look at it. The reason why I'm telling you this and looking at this chart here is because we're seeing something like this happening in the stock market. I don't know when this high is in. I believe the high is in now. That's my 2 cents worth, because of the way that it came down. We dropped 150 handles in 4 trading days. That's a sign of relatively a little bit of weakness anyway. Whether it's going to stay that way or not, I don't know. But this is what I think we're going to be looking at in stocks here. So protect yourselves, folks. Use stops, because look at the range yesterday. After we hit that one standard deviation and 786 retracement, the market rallied $5,000 in 4 hours. I mean, that's a huge move. And then what did it do? It came down $4,000 down to the 78% level. So we're seeing swings in the S&P, that we haven't seen since, back in the COVID thing. So we got to be careful up in here. So let's keep our eye on the ball. Now, one of the things that we want to do is to check on what Federal Express does tomorrow, because we want to know how John's trade came out. Now, the reason why I was suggesting to be out of it for 3 reasons, and I'll reiterate those. Hopefully John's still listening. Is, first of all, we're below the 78% level. Second reason is it's completed the ABCD and has gone a little bit below that. The only thing that you have going for you today is the fact that it's still up on the day. But the big negative is what is the unknown going to be about the earnings? And since that thing is coming down, somebody must know something about the earnings. So I'd be really, really reluctant to I am wrong a lot, believe me. Trust. Well, you guys know that, but it's just the risk, the amount of risk that's there. If he's in it today, he can put a stop in for $1 or $2 without any trouble. But if the FDX earnings come out really bad and it drops 5%, he could be looking at a $1,200 handle, and that's not, and it might even be more. We don't know. So that he asked the Dudette is asked, Miss Maria is asking the chart of the E-mini S&P, and I'll get this up here. This is an important chart, folks. I mean, it really is, because the Floor Trader's Handbook tells you how to figure out what that standard deviation is. And this is why the option market is so important. Folks, down there at 42.93, if it goes beyond one standard deviation, that's beyond the mean, okay? That means that you're going to be looking at a market that they have no what you call protection. So they've got to go in and start getting out of those and selling it. And that means that's how crashes happen. but you watch it at 1 standard deviation. Do we remember we were talking about the Russell at the same time? The standard deviation on Russell yesterday was 2160. I think the low was 2156 or 2152, something like that, and it rallied 20-some points. So that's why it's so important. And when you see the fib numbers line up with the standard deviation, you think those algorithmic traders aren't looking at that? Hello, operator. You bet they are. Absolutely, because it's all numbers. I believe me, I don't read that stuff. I hear the stuff that's going on with the Chinese thing with Evergrande and all that stuff. That's already been factored into the market, folks. With the swish of a wand, China can make that thing go away. How? They'll just make everybody pay up somehow. Not I don't know how they'll do it, but they can do it. They don't count votes in China, folks. They weigh votes, and only 3 guys do the weighing. So that's the main reason you can't be messing with that. We follow that Hang Seng index because it's been a really good indicator of what's happening. We saw that crash coming because of the Hang Seng index, and we stopped right where we should have. And whether we're going to keep going up or down or backwards from there, we'll just have to wait and see. But we don't know the answer to that because it's still a little bit too early in the game. So remind ourselves of that. Let's learn something here from John out in Colorado, who I met once before, a long, long time ago. He was living up there where Walt Bressert was living. Let's look at this FedEx chart. Now, here's what's wrong with it, folks, from a long side, okay? Now, I know it's oversold, okay? And he bought it at the right price. He bought it at $29.05. It's up about 30 cents from that price, I believe. But the problem is he's got an earnings report today. And go back and look back in July when there was an earnings report. It went from $2.95 to $2.85. That's a $10 hit. Now, he's willing to risk $2 here, but all of a sudden, because of the earnings, it could be $10, $20, or $30. You don't know. So that's why it's a big unknown. Now, we always have a big unknown. Now, I sent that thing from David Viscout on, risking. You have to take the risk when you're offered it and not when you have to. That's, David White's favorite saying, sell when you want to and not when you have to. So my projection here is just not worth the risk. Sure, it could be a good report, but, even if it's really good, it's going to have to be really, really super good to get this thing go up, and it could. But my feeling is the risk is the wrong way, and that's not what you want to do. It's not how much money you make. It's how much money you don't lose, and I don't like that just because of that. That's it. Okay, someone's in this video, you were going to show you how to add error bars in Excel. Standard deviation bars to the graph. I don't know. Mr. Z put that in there. Okay, all right. I don't know what that means, Mr. Z, but thank you very much. Okay, let's move on here. Any other questions you might have? 877-927-6648.
Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today.
The technology around us is changing every day. With so much happening, it can seem impossible to keep up with all the information. David White's investment newsletter, The Technology Insider, is designed to give you all the information you need to understand the technology that shapes today's markets and tomorrow's future. David White has made his living staying on the cutting edge of technology. His weekly newsletter will give you specific recommendations for value tech stocks, as well as entry prices, target prices, and stops to set for each trade. Dave delivers his weekly newsletters every Friday with updates throughout the week. You can get the Technology Insider at TFNN.com for only $37.50. Sign up for David's newsletter, The Technology Insider, and get an inside look at everything the technology sector has to offer. Try it risk-free today with our 30-day money-back guarantee. TFNN, educating investors.
Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Okay, folks, so thanks to Bo, I learned out something new here. I didn't know that HSBC was listed in the New York Stock Exchange. I guess that's where it's from, because we always looked at it on the Hong Kong Stock Exchange. What's so scary about the Evergrande is the fact that the number on the Hong Kong Stock Exchange is 333, and 333 in Chinese culture is not a lucky number. Now, if you look at the Hang Seng, ICHS, and I automatically think of Hang Seng. You can see the three drive to a top pattern that happened back in May. Okay, now you're seeing the market come down, rallied up to our favorite bearish signal of all time, which is a 382. And we go hit that, and now we got the ABCD pattern measuring it down here to about 2250. That's equivalent to about 10% more. And if you remember the chart, let's see if we can get that chart on the Hang Seng, because it's going to give us the same thing. What they're doing with this thing, with this Evergrande and the news and every stuff, it's just like the magic act. You know, when you ever see David Copperfield or any of these dudes that are doing that stuff, where they're saying, see what my right hand is doing, see what my right hand is doing, and all the actions happened on his left hand. Now, just take a look here. Move over to the Hang Seng here, and I'll quickly show you what I'm talking about. Now, this is the Hang Seng. You'll notice we had that three drive to a bottom pattern on Friday. It failed badly. I mentioned that in the video that I sent out. I said, watch out. If that fails, that's going to be big time. We went right down to the exact 1.27 at 23,800. We rallied another 500 points, just like we did before. But the ABCD on this measures to 22,300. That's a 1.618 expansion. It takes out the September lows that we have not done yet. So I think that's what the ultimate target is on this. Now, anything could happen because China can pull any gimmick that they want, and they usually do. So that's why I'm a technician, folks. I've got a really nice young man who's going to be a great trader up in Canada, and he sends me all the tweets and stuff that goes on. And I don't know how he does it, because that just does nothing more than to confuse the heck out of me. All I got to do is I just got to look at the darn chart. And when I see that, I know that, oh, now I've got a chance to control my risk at that point. And that's what I'm trying to do. Nothing more, nothing less. You know, I can teach this to people if they've got the time and effort to do it. It's not that hard. one of my joys is to work with students. And I've got, one down in Texas that I'm really looking forward to because he started out gangbusters, and I'm looking forward to see how he completes it because he's really, learning at a very, very fast race because he's excited about it, which is the main reason for doing it. But that's what we're looking at here with the HSBC and also the Hang Seng Index. That's what it looks like to me. I think they've already made up their mind what they're going to do with the Evergrande, but whether it's going to be market friendly or not, I don't know, because there's so many tentacles that are out there. I've heard from really smart people. Ray Dalio was on there today from what was this? I forget which hedge fund he's got, but he said it was basically a done deal, and it was not a big deal. He said it was bigger than long-term capital, but they got long-term capital got bailed out too. So I don't think there's any problem. But there's a lot of people involved in it. And I'm not involved in it, so I keep it simple as possible. I'm interested to find out what the next 4 ticks are going to be in the euro, as opposed to what's going to happen to Evergrande. So that's what I'm paying attention to here today. If you have any questions, it's 877-927-6648, and I'll be happy to answer them if I possibly can. All right. Now, one other question that someone asked me, and that was about the transportation index. Folks, that transportation index has not been looking good for a very, very long time. And I do believe that the fact that, this is a precursor of, big things to come. Now, I haven't updated this yet, so I don't know if the transportation index hit that 382 last night at the 61% retracement at 239. We have to check that right now, because if that's the case, that's going to be further indication that, we had a really, really important bottom being hit there. Oh, shut the front door and raise the rent. By golly, sometimes these numbers just surprise the old bejeebies out of you, don't they, boys and girls? Just a minute. This gets up here. Boy, this is really amazing. How can people do this stuff and not understand how these Fibonacci numbers work? Oh, my goodness. Holy cow. Let me just get this up here and you'll be able to see it. Look at this. There. Look at the low. The low in the was 241, and the number was at 240. I mean, that's within 1 point on a $240 stock. Boy, if that's not, and then we gap up today. So that's another sign that some type of a major bottom was hit there yesterday. By the way, the cycle that's hitting today, this big cycle that's jumping around in the market, astrological, is a Venus-Uranus conjunction. That's the Fibonacci cycle of 255 days divided by 365.618 of the year, and it's a conjunction. That means it's starting a new cycle. So with if you have a big rally like this and the market rolls over, that means that it was a high. That what happened in October the 2nd of 1987. I'm not saying that's going to happen again here, but if you close really badly today, then you've got to be prepared to say, uh-oh, this is what we got going here, and you don't want to stand in front of it. But the fact that we hit that number in the transportation and all the others, that is a major bottom, folks. Take your marking pen and write that down, because we take that out, it's not going to be good, because that's a sign that the market crested on the left side, high translation, and you're going to be heading down. How much of a rally we get? More of a rally? I don't know. All I'm looking at are the numbers. That's just all I'm paying attention to. So I hope that helps. By the way, tomorrow we will have Jeff Huge, who's been, ready for this big correction. Oh, by the way, just for information, I spoke to Stan Harley this morning, and he's looking for a retracement somewhere between 10 and 15% is what he's looking for here in the stock market. We went from 46, 45, 50. 45.60 to 40. We dropped 150 handles, so that would be another 300 handles lower is what he's looking for a correction here on this run here in the stock market. Overall, he's still pretty bullish, but that's what he's watching at the present time, looking at that right now. Remember, when these markets go down, like you're down 900 points in the Dow Jones Industrial Average, was that the Federal Reserve that came in and kicked the market up? I don't know, but how could it do it on every single index at the exact same time? That's what's totally amazing to me. I mean, that's a big thing to pay attention to from my perspective as a technician. And believe me, I don't listen to that stuff as little as I possibly can. I mean, it's mind-boggling. One other thing that's really important, and I want to cover it when we get back, about the difference between college football and professional football. It's very, very apparent, and it took my lovely bride about 30 seconds to ask me the question. I said, my God, I didn't even realize that was what's happening. And you're not going to believe this when I tell you this story, because you'll see it again. I watched it a tiny bit last night on Monday Night Football. So it's going to be really interesting to see what's going on here. 877-927-6648.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern, for free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
Markets can rise and fall like the tides. Subscribe to Basil Chapman's newsletter, The Opening Call, and you too can ride the wave. Basil Chapman is an authority in technical analysis. His Chapman Wave trading system has been helping traders identify trends and capitalize on momentum in the markets since 1984. TFNN invites you to test Basil's proprietary Chapman Wave trading methodology with a monthly subscription to the Opening Call newsletter for only $149. Your subscription to the Opening Call comes with a 30-day money-back guarantee, as well as daily market updates on key indexes, stocks, and commodities. Ride the wave! Sign up for the Opening Call risk-free today.
Are you looking for a secured investment which pays you on a monthly basis? The Tiger First Mortgage Program may be the program for you. The best rate on a 5-year CD in the country right now, according to Bankrate.com, is paying 1% per year or $1,000 per $100,000 invested. The Tiger First Mortgage Program pays 7% per year, paid monthly, on secured, high-value, buildable properties in St. Petersburg, Florida. The investment is for 4 years, paying 7% per year or $7,000 per $100,000 invested. Your investment is secured by high-value real estate in St. Petersburg, Florida. Your investment can be anywhere from $100,000 to $500,000. Do you want to make $1,000 per year on $100,000 invested or $7,000 per year on a secured Tiger First mortgage? The Tiger First Mortgage Program may be just the program for you. The Tiger First Mortgage Program pays 7% per year, paid monthly. For more information, you can call 877-518-9190. That's 877-518-9190.
Hi, folks. This is Steve Rhodes. Stay tuned for another great hour of The Trader's Edge, heard here at TFNN.com.
Okay, folks, it was Saturday, and I was watching, as I was doing my charts and stuff, I had the background game of Pennsylvania, University of Pennsylvania was playing, I don't know, I forget, Amarillo, Dillon, whatever it was. Anyway, they were going crazy in the stands, 70,000 people, no masks, with their pom-poms, yelling and screaming. And I went and looked at the other college games, the same thing. There was no social distancing, and it was really amazing. Then you go to look at professional football, and Sarah says, how come these people are not showing the stands? The only time they would show a stand is when the player would jump into the stands after he made a touchdown or something like that. They didn't show the fans. It was really amazing. I mean, it's we live in a different world, boys and girls. I mean, this is really a sad situation, I guess. Anyway, I just posted a little chart in here on the mini S&P showing an ABCD up there at 43.72, which was the 618 on the daily range. It was kind enough to drop about 17 handles into that, so there's the old ABCD working for you. The problem is they don't work all the time, but when they do, they're really worth quite a bit. So if you have an interest in the Floor Traders Handbook, just Larry Pesavento at gmail.com, and I'll be happy to figure out a way to get it out to you. And I will donate the money to a very needy family here that's had some really bad things happen from a medical standpoint. Young family, too, which is really quite a bit tough. So that's what we're going to be looking at here. If you have any questions tomorrow for Jeff Huge, Alpha Insights will be on. He's got some wonderful charts again. And then on Thursday, I'm going to do my very best to have either Tim Bost is on Friday, and I'll even ask if we can get Mr. Winsky in for a cameo appearance here pretty soon, maybe next week or maybe even Thursday. I'll ask him if we can do it. We'll put him on the Price is Right show and see if we can get that done. So live every day in an attitude of gratitude, my friends, and do something nice for your neighbors because they have a lot less than you and they need help. We'll be right back tomorrow.